Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I am jacking my volume up because Brad Garlinghouse was just on Fox Business, and this is the only copy of it I could find so far, so I'm going to play this for you.
Take a look at crypto this morning as we see stocks moving higher. Crypto is as well. Bitcoin at 62,000. As you see, Ethereum, Litecoin all up this morning. Joining right now exclusively is the CEO of Ripple, Brad Garlinghouse. Brad, it's great to see you.
Great to see you.
Thank you so much for being here. First, assess where we are in this market because crypto is up huge in just the last couple of weeks, right?
Well, it's been up. It came down a little bit this past weekend, but I think if you step back here the last 6 months, Bitcoin's up about 250%. I think you're going to continue to see tailwinds, partly because of the ETFs that have been approved, which you and I spoke about in Davos, but also the upcoming halving, which is imminent.
Yeah, again, it's a great point. The ETF introduction really broadened out the market in terms of potential users, I think, and people wanted to get in on it, so they bought an ETF to do so. But you recently predicted that the crypto market will double in size to $5 trillion by the end of 2024. That is a big prediction just by the end of this year.
Yeah, I don't even feel like it's that big a prediction when you step back. And, you know, like any market, this is driven by supply and demand. You have decreasing supply for a whole bunch of reasons, the halving, Bitcoin being an important one. You have an increasing demand, the ETF being a key part of that. And I think it's also people realizing that crypto plays a role as an asset. You know, it's a $2.5 trillion market, maybe it's a little less than that now. But so it's basically just predicting it's going to double by the end of the year. And if anything, I think I probably under-predicted that.
So now, folks, he's talking about this market doubling from where it is right now by the end of 2024. And now he's saying he thinks maybe he underestimated that. That's significant.
Washington is still trying to understand this market, and the people writing the legislation, potential legislation here, to put barriers and around this market. I don't know that they really understand the strength and the growth story here, but you think putting regulation around this, putting barriers in place is going to be a positive for this market?
There is no question. I mean, one of the headwinds that has held back the market, the largest economy in the world, the United States, has been one of the most problematic for the crypto market. Innovation, entrepreneurs, and capital have flown into markets that have actually constructively engaged this market. So Dubai, Singapore, even the UK, the EU has passed legislative progress here. The US has really been behind the 8 ball. This administration, I think, has taken a pretty anti-crypto stance, led by the SEC. Gary Gensler, as the chair, has really taken...
Because he doesn't understand it.
I think there's...
Well, maybe he doesn't, the people working for him don't.
It's not clear to me. I mean, clearly I think you have politicians, and I would frankly call out Elizabeth Warren, goes out and says the only people using crypto are, you know, the bad actors. It's just not true. And the U.S. should have a pro-innovation, pro-compliance policy. This is good for, in terms of growing jobs, high-paying jobs, growing the economy. And I think you're seeing that, you know, people go out and just, you know, talking points around anti-crypto, that it doesn't even make sense. This shouldn't even be a partisan issue. This is about growing our economy.
Yeah.
This is about leading the next wave of innovation. I was around Silicon Valley when the internet was booming, massive amount of value creation, massive amount of job creation. The blockchain and crypto space is here to stay, and I think that's become clearer and clearer. But the U.S. government needs to embrace that and put those clear rules around it so that all participants can play and grow.
Yeah, and I'm glad you mentioned all of those countries because that's also an opportunity for you, obviously, at Ripple. I want to get your take on that because you recently announced Ripple is launching a U.S. dollar-backed stablecoin later this year. You say this bridges the gap between traditional finance and cryptocurrency. Tell us how that will play out, why it's valuable, and give us the growth story for Ripple. Where does growth come from at your company in the coming 3 years?
So to start with that last piece, Ripple, about over 95% of our customers are non-US financial institutions. We sell payment solutions, we sell custody solutions around blockchain and crypto. We're going to keep expanding, even though the US market, as we were talking about earlier, partly from a regulatory point of view, has been slow to adopt. The non-US market has been really, really strong for us. And you're going
to be the infrastructure around all of that.
That is our goal. And we think that opportunity is huge. We think it's going to be great for Ripple. We think it's going to be great for XRP, which is a digital asset we use. So I'm very, very optimistic about that. I just think that the US needs to figure it out.
And the stablecoin?
Oh, the stablecoin. So look, Ripple has always been about how do we bridge this new world with a traditional kind of, people call it TradFi, traditional finance. And Ripple has always been that bridge. We started around payments and we sell into banks. A stablecoin, the demand for stablecoins has exceeded, I think, what people thought. It's a $150 billion asset class right now. Some forecast it to be over 2-3 trillion in a few years. The players in that space, particularly one called Tether, is a non-US based entity. And the US, frankly, is kind of going after that because they want this to be regulated.
Oh, they are, huh? They're going after Tether now?
A new bill introduced in the Senate to create some stablecoin legislation, which I think is a positive step of like, hey, finally we might get some forward momentum there. But I think that market's going to grow a lot. I think a US-based player who is compliance first has a great role to play.
It's a great...
Folks, I have been studying Ripple and XRP since 2013. I've held XRP since then, and let me tell you what, I've never, ever been more bullish on XRP than I am right now. It's almost, if I didn't know better, it's almost as if all the plans are falling into place. Check this out from Chad Steingraber. I think he's directly over the target here. The reason XRP price is not affected by today's partnerships and ODL payments utility use described below. All use of XRP globally today is essentially OTC trading. Let's skip down to here. So we seem to be in a pickle, right? They're using it, but not publicly. So how does this price go up by utility? The answer is simple. It doesn't, at least for now. It doesn't matter what the price is. It works regardless. The difference is volume versus supply. The volume of transfers that depends on XRP is key, because obviously millions of dollars per day is much different than trillions. So when the volumes do pick up due to business dependency, they will demand more XRP because they need it to send XXX amount of dollars. When they demand more, they will start acquiring XRP from any source they can get it, including the public. The utility side is 50% of the equation. The other 50% is the investment side, with ETF funds taking out public supply. The bottom line is that astronomical prices will come from a complete depletion of the public supply. As my theories play out, enjoy the ride. Boy, does this sound like the Shane Ellis theory. All right, here is the CFT, one of the CFTC chair people, Caroline Pham.
Yeah, and thank you for highlighting my engagement, my international engagement last year, because, you know, other jurisdictions are ahead of the United States. I don't know why people don't want to talk about that. It's like this open secret, but it's true. Other jurisdictions have had regulation. They've had registration and oversight regimes since 2018 or 2019, and they've been examining digital asset firms. And one of the things that I asked about these other jurisdictions when I sort of asked them to tell me about their lessons learned and what works and what didn't work is, you know, what really facilitates innovation. And it turns out that it's pretty consistent across the board, having a strong rule of law, having legal certainty, having political stability, and having that regulatory clarity. These three pieces are what creates the ideal circumstances or conditions for innovation to thrive. And so with what I can do today, with what the Digital Asset Market Subcommittee can do today, we're going to come out this year and we're going to work on best practices and industry standards for tokenized digital asset markets.
Okay, and then this is a guy from Ripple. Listen to what he says.
We at Ripple, we see RWA really as a key strategic pillar, particularly on RippleX. You probably all have seen the news with BlackRock basically launching a tokenized money market fund. And I think it really manifests that we're at the start of a paradigm shift where blockchain technology will be integrated in the real financial economy by traditional financial institutions, going beyond just, pilots and checking the innovation box, but really actually solving pain points. And so we at RIP.
Okay, and then here's this. Gary Gensler yesterday was bragging about how he's filed more than 2,000 enforcement actions. The SEC, this is a big deal for me. He's got $6 billion in civil penalties, more than $6 billion in disgorgement. And I said, while Gary brags about his enforcement actions against Americans and slowing innovation in the U.S., BRICS accelerate their innovation. Who is Gary really working for? I hope it's not China. I'm going to skip this one because I got too much I want to cover. First, I wanted to show you this. The development of blockchain-powered secondary markets will help expand adoption of tokenization in traditional markets. In a new report, Moody's Ratings says, look, if Moody's is even paying attention, folks, that means Moody's and S&P are ready to jump into this game, because they're going to start rating all these ETFs and all the different things. You're going to see ETF baskets. It's coming, folks. Now, Chad Steingraber, as we approach the halving in other countries about to launch, we are setting up for the biggest altcoin bull run in the history of the market. Once it starts, it will be a full 1 year at least of nothing but up. I think he's on to something here, and we're gonna go into this. We're going to talk about the Bitcoin halving, but we're also going to make in DAIXRP.com. We're going to talk about this Bitcoin halving and how prices have historically how they've reacted. We're also going to show you where we are in relation to what happened in the .com boom, because it's very interesting when you start looking at this. And we're going to talk about the .com. We're going to talk about how altcoins have performed within these Bitcoin halvings. The DAIXRP.com is going to be very interesting today, because you're going to see, we're going to go through these things. I want everybody to see, this is what, I was there during the .com boom. I saw it, I was there, I saw how this all happened. And this is, from the day I discovered this, I thought this was the second coming of .com, and I still think it, but this one's going to be bigger. Now, Bitcoin halving and previous price action. This is from Good Morning Crypto. Historical data reveals an explosive long-term surge. Look when the real explosions happen. 1 year before halving, 385%. 1 year after halving, 8,839%. So the explosion happens after the halving, in that 6 months to a year after. 1 year before halving, this was the 2016. That was the 2012. 142%. 1 year after, 285. Then in 2020, 1 year before, 26%. 1 year after, 548%. And folks, all of those, you didn't have ETFs. Now you've got the coming of ETFs, and you've got the stablecoin regulation, folks. This is the big one. When I was a kid, I watched Sanford and Son, and it was they ran a junkyard on TV. It was like a TV, like a sitcom. And the older man, played by, what was his name? His name was Red Fox. Okay, he was a comedian, and he always, anytime something got stressful on that show, his wife, who had predeceased him, it's like he would hold his heart and he would look to heaven. He'd tell her, he'd say, "I'm coming. This is the big one," and he's thinking he's having a heart attack. Well, this is the freaking big one, folks. This is the big one. And it's not just about Bitcoin, it's about altcoins. We're going to go into all of that in DAIXRP.com. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that here we go.